Hey guys, welcome back to this YouTube channel. Now we are in 2024 and we're going to take a look at the market data for 2023 December. Let's see how we ended off 2023, what really happened. A lot of interesting things in this report, things you probably didn't expect, things different from maybe what a lot of other realtors are telling you or what people in the market are telling you. So make sure you stick around so that you have the latest update on all the data and you know exactly what you want to do when it comes to the Calgary real estate market. Before we get started, hey guys, it's Iyer, your Calgary realtor. For those of you first time to the channel, welcome. And I hope you stick around till the end and you like this kind of content. For those of you who know me, I love making these videos every single month to go into detail about what's happening in the Calgary real estate market, see the data and break down the numbers, not just go based off what people are saying and sort of like the murmurs in the market. It's really important to keep an eye on the data and understand how to position yourself in the market so that you can come in at the best time. Of course, you do not want to time the market, but you know what? The more you know, the better you can do. So without further ado, let's get right into it. All right, to kick it off, first we're going to take a look at the summary for December 2023 by none other than Calgary Real Estate Board. See what they have to say, what happened in the market, and where do they think things are going. So when we get down to the summary here, feel free to pause the screen and read it in more detail. I've of course gone over before this and highlighted what I feel are the important key points. So as you can see here, we had 27,416 sales. Levels were still far higher than long-term trends. Shift in activity towards more affordable apartment condominium style homes. No surprises here, of course. We started out 2021 towards the detached side of things, and now people are trying to move towards the more affordable side of the markets. So we saw where basically 2023 was a year of condos. So row townhouses and apartments had an absolutely amazing year in 2023, and now that's shifting even more towards apartments. Higher lending rates dampened housing demand this year, but thanks to strong migration levels, housing demand remained relatively strong, especially for the affordable options in our market. Supply levels were low compared to the demand throughout the year, resulting in a stronger than expected price growth. The persistently tight conditions contributed to our city's new record high price. While the average benchmark price growth did slow from 12% in 2022 to 6% in 2023. And in 2022, when it was 12%, everyone was saying it's got to stop. Like, there's no way we can continue. And of course, that inertia did come down to 6%, but it is still relatively very high. And looks like with the movement on interest rates, 2023 has just had a very dampened year. And so once those pressures start coming off the buyer side of the market, you're going to see an increase in price, increase in affordability, and people are going to start coming back towards semi-detached row townhouses and maybe even detached houses. Taking a look at the sales numbers, as you can see, we are at 1366. So that is a decrease of 421 when you look at it month over month. In terms of new listings, we are at 1248, which is a drop of over 1,000 houses, right? So when it comes to sales versus the new listings, you can clearly tell there's still demand, but the number of houses coming on the market is not enough to keep up with the demand, and that's been the narrative for the last 6 months. Taking a look at the overall benchmark prices for different property types and also overall across Calgary, as you can see, the total residential price is at $570,100. So the price actually dropped this month by $2,600. Even detached dropped to $697,400. So it dropped by $2,100 month over month. In terms of the semi-detached prices, we dropped to $627,100, which was a drop of $1,600 month over month. The row townhouses also dropped $425,100. And guess what? I totally saw this coming. And I told all my buyers in December to put their offers in under list because I was monitoring the data on a daily basis throughout the month and not waiting for this market report. And I saw the trend happening. And I will show it to you very soon, sometime later in this video. But also, I'm going to make a completely separate video about that and where the trend is at, so that I can start making in-depth videos during the month for you guys, so you don't have to wait for this report and you know how to react to the market. Apartment is the only one that went up to 321, 400, extremely high demand, and this is where the affordability is. I'm seeing a lot of my buyers also start getting priced out of the market, so they're moving either from semi-detached to townhouses or moving from detached to semi-detached. Getting basement suites and detached properties was all the rage in 2021 and 2022, maybe even, but now it's extremely unaffordable. Inventory dropped again by 825, so that's down to 2,164. So as you can see, inventory is dropping, new listings dropping, sales are not dropping as fast. So clearly, this demand and supply are still going to continue pushing the prices up as we go forward. In terms of months of supply, the months of supply actually went down to 1.58. And so last month we saw an increase in months of supply to 1.67. But now that has come down to 1.58. So the pressure and the compression is starting to happen in the market again. And so my prediction is either in Jan or Feb, we will start seeing prices go up again. A lot of buyers coming off the sidelines, and they are starting to inquire about next spring. People want to move into the Calgary market by spring. And so clearly the demand is still there, but we don't have enough inventory for it. Now taking a look at the overall stats by property type. So as you can see, in terms of the year-over-year sales, overall sales still looks very strong year-over-year, 14%, while the new listings dropped significantly compared to last month. So the inventory remains very low, especially for semi-detached properties, which didn't even have much new listings come on the market in the first place. So this is causing months of supply to drop from 1.94 to 1.57 this month. Impacts of this will be seen in the Jan report. And semi-detached properties is something that has been suffering for a couple months now, extremely hard to find, especially in the Southeast District, and we saw this 2 reports ago. Now, going over the summaries for per property type by the Calgary Real Estate Board, and you will see there's a very general picture across all property types. It's pretty much the same thing. I'm going to go over the highlights. Feel free to pause the screen and read it in more detail. Again, now is really the best time if you need to move to Calgary or buy a house in Calgary in the next, I would say 6 months or even 10 months. Now is the best time to make your move, because everything slows down during the winter months. But now people are starting to think about March and April and what are they going to do next year. And so people are going to start shopping, but there's clearly not enough inventory. And so the prices are going to rise sharply. And I will show you it's a trend that's happened every single year. And so it's good to stay ahead of the curve versus reacting when everyone else does. So detached decline of nearly 20%. The detached market saw the most significant decline in sales activity. The persistently tight market conditions have supported further price growth for detached homes, albeit at a slower pace than last year. The benchmark price rose by nearly 8% in 2023, with the most significant gains occurring in cities' most affordable districts. Like the detached sector, for semi-detached, year-over-year sales growth since May was not enough to offset the pullbacks at the beginning of the year. And so decline in sales was driven by pullbacks from homes priced under $500,000, while sales improved for higher priced properties. So the decline in lower range was primarily due to limited supply choices preventing stronger sales. So the reason for properties under $500,000 not to have as much sales activity is because we just had so few listings. And so a lot of the buyers, even my buyers, were looking at semi-detached properties, just didn't like what was on the market. We had to go and find off-market properties, or we had to move them down to either row townhouses if they wanted to, or try and get them somewhere into detached. But that's where the market was at. The benchmark price rose by 7% over the last year, a slower gain than the 12% in 2022. Price growth ranged from a low of 6% in the city center to over 16% in the East District. And I bring this East District up every single report. You know that. Not my favorite place. A lot of buyers actually completely opt out. So even though there's gains, it's just a lower preference for a lot of buyers, especially those looking for better schools, first-time home buyers, things like that. East District is very heavily favored by investors or people looking to come and put infills or just change up entire home land lots. In terms of row townhouses, limited supply choices in the low range contributed to pullbacks in sales in 2023. While new listings did show signs of improving in second half of the year, all of the gains reported were in the higher price ranges, causing relatively more balanced conditions in the upper price ranges versus the seller's market conditions in the lower price ranges. So again, heavy competition in the lower price ranges because limited inventory, but we have a lot of inventory when it comes to above 400,000 and more. So the luxury listings, you have a lot of options. That's not where the price gains are really happening. Annual benchmark price gain of over 13%, ranging from a low 11% in city center to over 20% price growth in both Northeast and East districts. Apartment style properties, the only property type to report gains in sales this year, resulting in a record 7,884 apartments that were sold this year. Highest starting point for inventory levels and gains in new listings. So we had a lot of inventory, hence a lot of sales, and just a very good lucrative market. Apartment condominium prices finally recovered from their 2014 high earlier this year. So we had an entire slump for a whole decade where apartments were below what you bought them in 2014. But now they've broken past that point and have continued going on, reaching a new record high of 321,400 by December. 2023 benchmark price rose by over 13%, a faster pace for the annual growth reported last year. Now taking a look at the property prices by the different districts. I love this chart. And it's very interesting this time around. You can see price drops in many different areas, and that's what's contributed to the overall benchmark price coming down. So when you look at North, dropped by 600, Northwest dropped by 2,100, Northeast dropped by 5,000, East dropped by 7,800. So they were just, it's nothing compared to the gains that they have actually seen this year. You can see here 23.6% gain. So 7,800 is just pocket change at that point. Southeast dropped by 4,000. South dropped by 400, almost negligible. West got the biggest hit at $20,300 drop in benchmark price. That's a major decline. And City Center dropped by $5,200. Secondary slowdown region. So right after West, City Center saw the biggest hit. And to me, City Center that's the more painful one because City Center barely even saw gains. They were actually pretty leveled out, slow gains over time. They only went up by 5.3% in the entire year, which is closer to your normal, and they get hit by 5,200. Now, of course, this is a very high level overall picture, which is what I'm telling you guys about. It's extremely important to break down the data by area, by property type, and by trends. And so as you can see, for example, this is the spreadsheet that I prepared for my buyers while we were looking for properties in December. And I saved all my buyers, every single one, basically put in an offer under list price. We saved thousands and thousands of dollars. And all of this was because I was very careful about seeing what's happening in the trend. Not only did we see heavy price drops happen in December, as you can see over here, but we also saw all the properties, a lot of properties starting selling under list price. And so we follow that trend. In fact, when I would reach out to the listing agent on the other side, they would tell me like, it's extremely low inventory. Why are you going under list? But then when I would show them the data, they would understand that it is a different market than people were expecting the same inertia as 6 months ago. And so December was a good time, a lot of opportunities in December because it was extremely slow. Everyone's just busy on the holidays. People weren't putting in as much offers, and we could get some really great deals, everything under list. Literally every single offer I put was under list. And there might be some of that opportunities in Jan too. I'm going to keep tracking that data. So if you want to see that data, make sure you follow this channel. I think that will still continue at least towards till the end of Jan. Come Feb, I think you're going to have to start going almost at list, or if not above, because that's when you're going to see still extremely low inventory, but then a lot of buyers now have come on the market by then. So yeah, stay tuned, and I will share that document as we go forward. So sales overall remain at the second highest level since 09, pretty close to last year, but yeah, we're still more than last year, but relatively close. But 2021 had the highest amount of sales in a long time. In terms of the total inventory, as you can see, we are pretty much at par now with what we were last December. And that is going back all the way to 09. So inventory still remains extremely tight, putting a lot of pressure on the market. It's the same story. In terms of the months of supply, I'm going to call out the different areas by property type where you're going to face the highest amounts of pressure. So the lower the months of supply, the lower this graph or any quadrant, the more pressure, the more competition you're going to face for that property type in that location. So this is something definitely to keep an eye on if you are a buyer. So when it comes to detached, east, northwest, and southeast, that's where we saw the lowest levels in the same order. In apartments, the lowest in east, west, southeast, north, and northeast in that order. Semi-detached, southeast, south, and northeast. And in rows, we saw the lowest in east, and then after that followed by north. Now, this is one of my favorite graphs. If those of you who have been watching this channel for a while know how helpful this is for buyers. So the way I would go about this graph, if you're a buyer, is decide a budget, then decide a property type that you would ideally like to buy. And then that will give you the areas of the market that you should potentially be looking at. Now, if you don't like the areas of the market that is being suggested by this graph, you could, of course, either change the property type or change your budget and figure out where you want to land. And it's a great conversation starter. It's a great point to get things going, to get an idea of where the market's at. So when it comes to detached, for example, if your budget's only around, say, 600,000, then you're potentially looking either at northeast, and the other two options are maybe south and southeast if you can stretch your budget a little bit. So that gives you a very clear idea. It's super easy to map. For example, if you are buying a semi-detached and your budget's close to, say, 600,000, you're going to land in northwest, right? And not to say you cannot buy anything below 600,000. So of course, all of these become valid options too. But that gives you an idea where your affordability index is by location. Now, moving on, year-over-year price growth comparison in December. Same as previous months. East and Northeast, of course, are leading the gains across the charts. But I usually ignore them because it's just an anomaly, not a high preference for a lot of buyers, and people are usually looking in other areas. So look more closely for other parts of the market that you are considering and see how they are appreciating at this chart. So feel free to pause and take a look. We're almost more than halfway through this video. So if you like this kind of content, make sure you subscribe, make sure you follow me. Again, get the hi hellos out of the way. You can book a call in the description, reach out to me, and let's chat. Let's see where you're at. Start planning ahead. You don't want to be caught late in the game. You want to start looking ahead, see where you can be in 2 to 3 months with your family, how you want to make the move, and see what's best for you so that we can start getting you set up. It takes time. It's not a quick process. So if we get these conversations happening now, come spring and summer, you'll be a lot more confident into the property that you actually want to buy. Moving on into total inventory by price range. As you can see here, we have a significant drop in inventory for the 700 to 999,000 range. But remember that this is actually spread across $300,000, right? Versus the other ones are $100,000. But still, it's a huge drop compared to previous months. So that's where a lot of inventory has been sucked up. When you look at the total sales for these same price ranges, the parts of the market that saw the biggest drop in sales in the previous month held steady, but the others that were stable actually dropped significantly, which was very, very interesting. So 200,000 to 299,000 saw a huge drop in the amount of sales happening, and 700,000 to 990,000 also saw a huge drop happening. So those were the parts that were a little bit more stable last month, and the other way around. So the ones that saw the huge drops last month are a little bit more stable. So maybe buyers actually consolidating to the mid range of the market, but as fixed rates start coming down, this should relax back across the price ranges. So now everyone's consolidating around that magical first-time home buyer range that I say is anywhere between 400,000 to 600,000, right? That's where usually a lot of sales happen, and that's the affordable part of the market. So I think that's where everyone's consolidating right now. And then drops on 200 to 299,000 range is because apartment benchmark is now 300,000 plus. So the reason for a huge drop in sales in this area, and that's my prediction, is because a lot of apartments now have broken past that 300,000 mark. So that's where the sales are now happening. So that's what you have to understand. This graph means very different things across the months as the benchmark prices move, because it's not the same product that remains in that price range. What you could get under 300,000 a couple months back, now you no longer can, right? So things change. And so it's interesting to understand where the market's shifting and where people are going, what kind of products people are trying to buy as the market moves. So something to keep an eye on. Now, taking a look at the benchmark prices across the 2 years, of course, feel free to pause and look at this in more detail if you'd like to. But here is something I want to call out. If we look at the benchmark price for December, it is at 570,100, right? Even though we had that minor drop. But it is up $77,200 since Jan 2022, and $50,000. So out of that 70,000, $50,000 was gained in 2023. So even though 2023 was such a dampened year across Canada, right? But Calgary also, rate cuts being just around the corner. What do you think is going to happen in 2024? It's just going to completely unlock the potential of Calgary market, affordability through the roof. People don't mind spending money, and this is something I've seen in all buyers. If they can buy something for 700, for 800, they will. It's just a matter of what the bank allows them to borrow. And so that's what's going to happen next year, is people who were just about qualifying for that 500,000, 600,000 entry range are now going to qualify for 700, are going to qualify for 750, 800. And so that's going to put a lot of pressure on the market, because people can buy the same products and have higher chances of getting the house they want through bidding wars. So make sure you get in early. Now is an optimal time. I cannot stress this enough. Jan till Feb, optimal time to really set yourself up and get your offers in, because after that point, it's really all up to the market sentiment, which I think is going to drive the market crazy. Going down here, as you can see, City of Calgary total sales. Sales for 2023 closer than 2022 and very close to 2021. Clear trend of shifting away from detached to affordable parts of the market like apartments. So as you can see here, our detached was all the way up here, but now when we come to 2023, much lesser. So, and at the same time, the apartments have, so your green is the apartments. So the amount of apartments that we're selling now is way more than what we sold in 2021, and the detached has dropped. So people are moving towards the affordable parts of the market, and clearly we can see the price gains reflect that. In terms of the total new listings, detached has dropped compared to 2021. We ended 2023 at the 10-year average. So overall, lesser listings than 2021 and 2022, but significantly higher demand, right? And as far as the apartments go, we do have more apartments than 2021 and 2022, but still not enough, right? In terms of the final benchmark price, City of Calgary total inventory and sales. The seasonal trend line looked good till last month. And we did change trajectory from this super fast paced upward trend. We took a break for a while and then we started trending back up, but slower. And then we now are shifting back down. But you will see why this is not something to hold on to, because when you look at the past 5 years, this is an obvious trend that is expected to happen with the seasonal data. And I knew things were coming down just because I told you, like, I look at the data every single day. And so we were putting offers in under list. And of course, we got discounts on everything. Will that continue? Let's see. So, should spike up by Feb, is what's my take. Will we see inventory consistently trend above? So, right now we have a small peak up here towards the end of 23. I hope we at least hold that for a little bit to take some pressure off the buyers, just till we hit somewhere where a lot more houses should come on the market and we should get something like this. As far as City of Calgary total prices go, so here you can see across the 5 years, like I was saying previously, we still have the seasonal pump in Q1 further supported by interest rate changes, but will we be able to support it, right? So that's the big question. There is a lot of optimism in the market, and you don't want to be jumping into the market when every single person is talking about investment opportunities in Calgary. That is when it's already probably a little too late, and people, every single person is now buying a house. And you might say, isn't that already the case? Not yet. I still feel, because of the interest rates, the amount of people that actually wanted to buy houses, we have only seen maybe 50 to 60% of them. There's still 40% buyers sitting on the sidelines waiting for interest rates to drop. And those are the more conservative buyers. They just want something more predictable. They don't want to take risk, but they will come onto the market as soon as the interest rate drops, or there's any kind of optimism in the market when it comes to CPI data or when it comes to the recession data. So the biggest threats in 2024 for the economy and the market as a whole is sticky inflation, recession, and stagflation. Stagflation, less so now. Let's see. But those were the three main fears that were in the market so far and have proven completely false. A lot of people lost out on opportunities by sitting on the sidelines. So, as you can see here, in the past 5 years, we've always had a slump during the end of the year. People going off on holidays, people taking their foot off the pedal and just having a good time for the last month of the year. But come Jan, you always see a pump in Q1. And that's when people are planning for spring and summer to hit those peaks every single year, right? So if you're sitting on the sidelines deciding whether should you get into the Calgary market now or later, reach out. Let's get those high hellos out of the way. Have a conversation. Just get into chat. I can show you a lot more data than I have on here and show you what might be the best fit for you based on your, again, not everyone. This is not a blanket statement that everyone should be buying right now or everyone should be selling right now. Of course not. There's a right time for every person based on their situation and how urgently they need a property versus what they're trying to do. So if you're an investor, it's a completely different strategy. If you're a first-time home buyer, different strategy. If you have kids, different strategy. And so make sure you reach out. Love to have that call with you, discuss where 2024 is going at, and hopefully find something that's absolutely amazing for you and your family. I look forward to hearing from you guys. And till the next video, stay tuned. Peace.